Welcome back in conversation now with the management of Gateway Distriparks. The overall global slowdown continues to impact the industry, with revenues for the company declining over 2% and margins also contracting on a year-on-year basis. We're being joined by Samvid Gupta, who's the Joint Managing Director of Gateway Distriparks, to discuss the road ahead for the company. Samvid, good afternoon. Thank you so much for joining in. In our earlier conversations, you have mentioned that the railway business might see volumes of 10%, may even go up to 12 to 15. But how have they picked up in the third quarter, and do you stand by the guidance for the railway business as well as for the container freight stations as well?
Hi, good afternoon. Thank you for having me. So there has been a global crisis with the Red Sea situation that has been ongoing for the last 9 months approximately. So volumes have taken a toll for year on year. But if we look at quarter on quarter, we saw an improvement in rail volumes by almost 13%. This includes revenue, and EBITDA level has also seen a drastic improvement in Q2 versus Q1. The trend is ongoing for Q3 as well, so we hope to replicate the numbers, at least what we've done in Q2, and possibly better them also. We have some pipeline in place which should come into the next coming quarters.
Right. The reason why we ask you this is because even in FY24, the earlier projection of volume growth was 10 to 15%, but macros were so tough that you ended up doing just about 2.5% growth. The first half of this year, we remember the volumes have been on the negative side. You have expected about 10% sort of volume growth in the rail business over last year. So second half, even if it does improve, are you confident of that 10% mark, or do you believe that you would have to calibrate that on a lower level?
Yeah, so H2 versus H2, we still might see that number, but I think if you have to look at overall for the year, since Q1 was quite low,
Right.
Q1 was our worst quarter in the last 2 years, so I don't think we'll hit the 10% for the full year. But we're still aiming for some growth for the full year compared to last year.
How much would that sum be?
It's hard to say right now. We're taking it, month on month. We are seeing some improvement, but we'll probably give a better guidance next quarter on it.
Right. What about margins, Samvit, and how about the EBITDA per unit, if you could share some color on that?
Sure. So Rail saw a good quarter. Rail saw a margin of almost 9,800 EBITDA per TU. CFS was about 1,000 per TU, but this is primarily because the facilities are quite old and there's heavy repair and maintenance going on. There are also some one-offs that took place in the previous quarters. This is some old arrears due to railways on account of staff recovery and stabling charges. We might see some of those also in the next 2 quarters, but the real margin is looking healthy at 9,800. We should be within that range going forward as well.
Right. And what about a couple of plans that you had underway, which was one, the land that you have over 500 acres, you were thinking of doing some sort of joint development or maybe looking to offload that itself. That was one. And the second one was the CFS assets. The last time we spoke, I think Mr. Prem Kishan Gupta had come. He said that the business is valued at around 1,000 odd crores. So they're looking, to offload that as well, in talks with some of the operators. So on both those parameters, what's the update that you can give?
Yeah, so on the rail side, we have enough capacity to go 4 to 5 times of our current volume. So we bought the land way ahead of its time, keeping in mind the future business for the next 10, 20 years. CFS side, we have about 120 acres. We are looking at maybe monetizing the entire vertical, but it's too early right now to say at what value and what would the timelines be. But we have collected all the data, and now we'll probably start talking to some people and see how that process goes. But I don't think we should see anything monetizing within this financial year on that. That'll probably take place next year.
So on the 500 acre land that you have, that's entirely for railway use, or some part of that is also non-core?
No, so 120 acres out of the 500 is for CFS vertical, and the balance is for rail vertical, where we are primarily doing it for ICT, but we have also evaluated some areas where we can build cold storages and domestic warehousing as well. But it is core to our overall group business.
What capacity has come on stream so far? Samvit, what's the update on your new capex as well? You had a plan of around 500 crores for 2 more terminals for the financial year. What has come on stream so far, and what's the second half looking like?
So we've just done about maybe 40-50 crores of that capex right now. This is for the Jaipur land that we bought. Another maybe 20 crores was probably spent on some equipment. But the major capex will be done on new terminals. We're still awaiting that. Land acquisition has become a bit of a challenge. So We are negotiating with one particular land we are looking at in the Northwest Corridor. Jaipur, for the time being, we are going to wait until the land frees up from the issues that are there currently, which we've reported in the past. But we are also meanwhile looking at a tender issued by Dedicated Freight Corridor for some parcels of land where they have across different stations. So we will be exploring Gati Shakti terminals too for expansion as well.
You mentioned land acquisition has become a challenge, Samvid. Could you elaborate on the reasons why is that so?
Basically, land prices have shot up drastically in the last 3-4 years. And if you look at it for the ICD, the requirement is basically you need about 20 to 30 acres minimum. Alongside, you need 1 kilometer of length to get a rail siding in. And it should be close to a highway, it should be close to a manufacturing hub. So it limits the options a little bit, but we are still actively pursuing 3 or 4 opportunities, out of which we should finalize one by the end of the year.
Right. And what is your aspirational proportion of double stacking? Because this is a higher margin business, right? And you had plans to convert the Faridabad ICD into a double stacking unit as well. So just wanted your thoughts on where does that number stand at as of the first half of this year? And what's your aspiration? What's the differential in your EBITDA realization in a double stack train versus the other ones as well?
Right. So in Q1, our double stacking was at about 33%. In Q2, it's gone back up to 38%. In the past, our peak has been around 43-44%, which we're hoping to get back to. Faridabad actually became double stacked just about 10 days ago. So we should see some improvement there, both in terms of margins as well as volume. Market share has already grown for us, and even though the macros are down, so we'll look to capitalize on that further. It's hard to say margin per TEU. It really depends on the market and the type of volume mix and the weight of the cargo. But essentially, double stacking is 50% of the rail haulage payout compared to a single stack. So there are definitely benefits to it.
Right. The other thing is Snowman Logistics. You did say that some part of the land that you have, the 500 acre, of which 120 is non-core, considered non-core, you are building cold storages, etc. And we'll speak to you or through you for Snowman Logistics as well. They reported their numbers of 15% revenue growth. The EBITDA declined out there. They have a planned capacity addition. So if you could give us a sense of the expected growth in Snowman Logistics for the remainder of this year and your plan, whether you will go the whole hog this year as well when it comes to acquiring stake. Because FY24, you increased it by about 5% from 40 to 45. And the first half of this year, you've increased it by another 2.1%. So are you going the whole hog this year as well?
Right. So yes, we'll be planning to finish 50% by March under the creeping acquisition. So that is still on track. We're buying about 1 to 1.25% per quarter. In terms of growth, we are looking at 20 to 25% top line growth in Snowman. EBITDA was slightly down in H1, but H2 should be slightly better as we are starting our Lucknow, Calcutta, and Krishnapatnam. All three should be operational within the next 2 quarters. There was some loss of business and some increase in electricity prices, which has led to decline in margins. So hopefully Q2 should be better than H2 should be better than H1 in that terms.
So you intend to buy more by March. You want to finish completing around 51%, if we heard that correctly, Samvid, right?
Yeah, we can go up to 50.25%. So we'll definitely cross 50 by March.
No, and the next financial year, I mean, what's the long-term target here?
So we don't have anything fixed. Our first immediate target was 50%. Then we can start consolidating line by line, and it becomes a full subsidiary rather than an associate company. We'll evaluate thereafter. We also have plans in Gateway for bigger expansion. So we'll see if we have some free cash flow, then we can possibly have a look at it, but nothing immediately planned on that front.
That becomes very interesting, right? Because earlier it was a full subsidiary itself. Then you all went the IPO route. It became a separately listed entity. Now you're going the creeping acquisition way to finally make it back your subsidiary. What exactly happened out here?
So at that time when the IPO happened, we needed the funds to expand. Cold chain was also very new back then. But during COVID, we saw the importance of cold chain. And that's really when the revenue started picking up in Snowman. Pricing improvement was also there. We've also recently launched the 5PL vertical now, which is driving the major revenue growth, where we're doing exclusive end-to-end for some big MNCs. So it's become more of a core asset for us. At that time also, before COVID, we had to choose between buying out the Blackstone stake in Gateway Rail or monetizing Snowman. We had raised 550 crores of NCDs. So to pay that back at that time, we had signed the SPA to sell Snowman. But now we have no such plans and we want to make it a long-term holding for Gateway.
All right, Samvid, thank you so much for joining in. Wish you good luck for the second half of the year as well. The management of Gateway Distriparks also sharing their plans for Snowman Logistics. Time for a short break, but as we do that, as CNBC TV 18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC TV 18 Global Leadership Summit on the 14th of November, starting 10 a.m. onwards. A power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more, only and only on CNBC TV 18.